Good day, guys. Welcome to another episode on Accounting Wiz. Today we'll be calculating the accrued rent income with a percentage increase on our income statement. The income statement is also called the statement of comprehensive income. The income statement is another type of statement whereby the business can actually use it in order to measure whether the business has made a net profit or a net loss over the financial year. I'm given the information below above. So the first information I have the pre-adjustment trial balance on 31 December 2017. It is important to note that every time when we are given the pre-adjustment trial balance, it is always given to us at the end of the financial year, which is the end date, because of the pre-adjustment trial balance is drawn up at the end of the financial year. So if I have the pre-adjustment trial balance on 31 December 2017, as we've previously said that it is given to us on the end date of the financial year, then it should mean that my financial year began on 1 January 2017. Under our pre-adjustment trial balance, because we're going to focus on the rent income, I'm going to my nominal account section, which shows my incomes and expenses. Going to my nominal account section, I have a rent income of 46,400. Right, let's go to the second information. So on the second information, I'm given adjustments and additional information. Going to number 4 under information 2, I'm given the information that the tenant has paid rent until 30 November 2017. The rent was increased by 10% from 1 June 2017. So right now I'm given a pre-adjustment trial balance of the rent income, but then I'm not given any monthly payments of that rent income. So this is what I'm going to calculate. So as the information clearly says that the tenant has paid rent until 30 November 2017, and our financial year ends on 31 December 2017. It means that I as a business am owed rent for December 2017. So that is what we're going to calculate. Every time when we're dealing with these types of adjustments, it is wise to draw your financial year on a timeline. A timeline such as this one, where you can clearly see the beginning of the financial year as well as the end of the financial year. So I'm going over through this adjustment point by point, just so we can know how we're going to calculate this type of adjustment. So the first point, the tenant has paid the rent until 30 November 2017. As it says that I'm going to look for my November on my timeline over here. November is clearly a month before December, meaning that over here I have my November. So with that information, I know that I've only received rent up until this point over here, November 2017. As we've previously said, I'm owed rent for December 2017. That is what I'm actually calculating for. Going over to the second point, that the rent was increased by 10% from 1 June 2017. On my timeline, I'm going to look for June. As my financial year began on January, and the month that follows will be your February, March, April, May, June. Over here I have my June. So on my June I clearly have an increase of 10%. An increase of 10%. What I'm going to do, right, is to ask myself, if my increase of 10% started on 1 June 2017, what does it mean? It means that from this point there, 1 June, up until the month that follows, I've received rent income with an increase of 10%, with an additional 10%. So the first stage of calculating rent income will be to find out how many months did the tenant pay the rent at an original price. The original price in percentage wise will be 100%. That 100% is the original price without an increase or decrease. Going to my timeline, I'm going to look for the month that have no increase of 10%. Those months will be clearly shown on my timeline as being firstly my January, which is 1, February, March, April, May. So I have 5 months that are paid 100% by the tenant. What I'm going to do is take that 5 months, multiply that by the 100%, which is equals to 500. The next stage in calculating our rent income will be to find out how many months do I have that have the additional 10% increase. Looking at my timeline, I can clearly say that my months that have the additional 10% will be my June, July, August, September, October, November, and December. But then I've only received rent up until this point here, November, meaning that I do not have the money for December yet. That's what I'm actually looking for. So instead of including my December in calculating, I'm just only going to include my months up until November. So what I'm going to say is that I'm going to take these months over here, which is 1, 2, 3, 4, 5, 6, which is 6 months, multiply that by the 10% increase, which will be 100 plus 10, which will be 110, equal that to 660. The next stage is simply adding these two amounts over here, so I'm just going to add these two amounts over here. So when I add these two amounts over here, they will give me amount of, it is going to be 500 plus that by 660, it will give me an equal of 1160. Right, I have my total percentage wise of my rent income for the financial year. Now, as we've previously discussed, that I have a pre-adjustment trial balance of 46,400. That pre-adjustment trial balance is the amount that is accumulated for the rent in the account in the financial year. So this amount over here, 46,400, it is the total amount that I as a business have received. But then that amount only has been received up until 30 November 2017. I'm going to take that amount, which is 46,400. I'm going to multiply that by the month that I'm actually looking for. I'm looking for December. December percentage wise has an additional 10% increase, as well as we've previously discussed. So with that 10% increase, it is going to be 110. It's going to be 110. I'm going to divide that by the month by the percentage that I've calculated here, by the total percentage that I've calculated for the entire year, which is 1160. It will give me an equal of 4,400. Now with that money over here, this amount over here, it is actually my rent with an additional 10% increase, meaning that I've just found out that my December amount that I've actually been looking for, it is worth 4,400. Because of this 4,400, it includes a 10% increase. As I've previously discussed on our last video on how do we add or subtract these amounts on our income statement, we're going to ask ourselves whether this this adjustment, it is an accrued or a prepaid adjustment. Remember that our accrues are always added back to our income statement because simply we haven't received them yet and we haven't paid them yet. But then we're going to add them because of they relate to the current financial year. But then our prepays will subtract them because they are not related to the current financial year. There are adjustments or amounts for the next financial year. Which is 500. It is an accrued, and as an accrued, I'm simply going to add it to my respective rent income account. So guys, I hope you enjoyed this video. Please like and subscribe and share to your friends who may be interested in finding how to solve these types of accounting problems.